Thanks for joining us. I'm here with Jim Smith of SouthwestRe. Jim, good to have you with us.
Thank you very much.
We're here in the beautiful Turks and Caicos Islands, and a question that people ask a lot, there's a presumption that you're doing business here in the Turks and Caicos Islands in order to avoid paying taxes. Can you set the record straight on that?
Before I answer that, Adam, I'd like to say I'm really kind of mad at you. When I said, let's go to the Turks and Caicos Islands for this interview, I was joking. I wasn't really serious. But you took me up on it, and here we are. But people think that we go to the Turks and Caicos Islands or you go to a foreign domicile to avoid taxes. And I'm glad you asked that question. And it literally is. We pay the same taxes in the United States with our companies as any other insurance company in the U.S. would pay. It's just we form the company offshore for one reason and one reason only, and that is the capital requirements are lower in the Turks and Caicos Islands than they are in the United States. And really, the Turks and Caicos Islands copied a U.S. state when they adopted the legislation they did 25 years ago. Arizona was the favored domicile in our industry 30 years ago. It cost $12,500 to form an insurance company in Arizona. But Arizona started raising their capital requirements. People started looking for an alternative place to form companies. And one person or a person in our industry researched it, found the Turks and Caicos Islands had low capital requirements. And the next thing we know, the Turks and Caicos Islands became a favored domicile to form insurance companies or reinsurance companies. It still takes $1 million to $2 million to form an insurance company in the United States, but in the Turks and Caicos Islands we can form a reinsurance company, and the usual cost is around $5,000.
Let me ask you, a lot of question comes up. You have insurance and you have reinsurance. What is the difference between the two?
A lot, or not very much, whichever. It could be both answers. Basically, an insurance company is founded in a specific state. Insurance is still state regulated in the United States. So, for instance, if I wanted to form an insurance company in Texas, it would probably cost me around $2 million. I'd probably need $4 million of capital and surplus to form an insurance company. But once I have the insurance company formed, then it can issue insurance policies. It can do anything that it's licensed to do as an insurance company. Now compare that with a reinsurance company. A reinsurance company doesn't have to have a license to do business in a state, but it does have to have a license to operate. But reinsurance is something that there's probably, we try to do the math on it, $500 billion of premiums a year are paid. We just taken the reinsurance laws and used them to our advantage in the Turks and Caicos Islands.
Jim, explain more for our audience what reinsurance is.
Okay. Well, we use it a little differently than what the standard definition of reinsurance is. Let's take life insurance, and you've got a company, a small life insurance company, and they insure an individual for $1 million, and the premium is $10,000. Well, obviously $10,000 is not enough to pay $1 million risk. So what that small company will do is reinsure out enough risk so that if they have a claim, it doesn't hurt the reinsurance company if they have a claim. So they'd probably reinsure out $900,000 and keep $100,000. And a big reinsurance company would get the $900,000. That's what we do, except we've turned it around. We go from the big company to the little company. We've got a big company that's an insurance company, or it's sometimes called a direct writer. The direct writer writes the insurance, and then it reinsures the business into a small company. So the question then becomes, how can you seed business? And that's what it's called when you put the business out. It's seeding business. How can a small company afford to assume the risk that a big company is not keeping? And it's because of the nature of the business. In our business, all the products are single premium policies, i.e. you get the premium up front. And then you pay the claims over the life of the policy. If you've got a 5-year car loan, you're going to be paying the claims over 5 years. But you've got the money up front. So you really have enough money day one in order for the claims to be paid. And that's what the Turks and Caicos Islands has understood from 25 years ago. And they know that this product or the products in the F&I department, or the finance and insurance department, generate enough premiums to pay the claims from day one.
Jim, tell me, what are the insurance products that are reinsurable?
Well, I hope I don't answer a question with a question, but I'll even answer it for you. What's the name of your magazine? F&I Magazine and Agent Entrepreneur. But F&I, finance and insurance, and those are the products that are sold or are promoted at a car dealership. And the key word is insurance. Nearly every product that's sold at the F&I department of a dealership is an insurance product. And it started with credit insurance many years ago, which it's been gone out of vogue. It's migrated to service contracts, and then there's a myriad of products now. Nearly every product that you're talking about that's sold at a car dealership is either insurance or an insurable product. And what we do is we form reinsurance companies that are able to assume that risk that a direct writer is able to insure.
Jim, SouthwestRe is a company that does a lot of things, and you really pride yourself in your company's ability to kind of take the dealer from the cradle to the grave, so to speak. Tell us about SouthwestRe and everything that you do.
Well, thanks for the question, first off. And we think of our company as being vertically integrated. I'll use a big term right off the bat. And when I say that, I mean that we provide all the services that are necessary for a dealer to have his own F&I program. We have the direct writer or the insurance company that's in the mix. We have the policy administration, which we think ours is some of, if not the best policy administration system on the market today. We have the claims administration, and then we have the profit sharing programs. And basically, I hate to say it, but this is where we've been doing business with the profit sharing programs for 25 years, and that's in the Turks and Caicos Islands. And we've been able to form our own insurance manager in the Turks and Caicos Islands. So we really are able to put all the pieces together of developing a reinsurance program for a dealer. And it's like last night you asked me a question, what if somebody comes to you and they have some unique type of product? Well, that person would have to go to Company A to do the product, Company B to do the filings, Company C to do the administration, and we do it all in one. So we have the ability to do all the administration or all the development of any product that's out there, and we pride ourselves in that.
Now, Jim, we are in the Turks and Caicos Islands. Tell me a little bit about the regulatory environment.
Good question, Adam. And first off, insurance is state regulated or domicile by domicile regulated. So every state in the United States, there's 50 state regulations that regulate insurance. In a foreign country, it's the foreign country that regulates insurance. And this truly is one of the highest regulated industries out there. So you have to be knowledgeable about the insurance laws and everything. We comply from a writing of insurance standpoint. We comply with the state regulations that we're operating under in the United States, in the state of domicile of the insurance company, the direct writer we use, and then we comply with the TCI regulations. The Turks and Caicos Islands is known as the TCI. We comply with their regulations here in TCI. One of the paramount things they require is a B-rated or better direct writer to write the business, and then you can cede the business into a TCI reinsurance company. And we do that, and most of the providers out there do it also, and they know these regs. So as long as you have a direct writer that writes the insurance, you can reinsure the business into a TCI reinsurance company, as long as you have a filed business plan and everything. And as a matter of course, while I've been here this week, we met with the head of insurance of the Turks and Caicos Islands, and I just asked him, I told him what we're going to be doing today, and I asked him, is TCI still pro-business? And he said, definitely so. So I'm happy to report that the Turks and Caicos Islands is still very pro-business and very much a promoter of the reinsurance programs that we promote today.
Jim, you've told us about the insurance regulatory environment. What about the tax environment?
Well, first off, the tax environment we operate under is the U.S. tax environment. Our companies file U.S. tax returns just as a U.S.-based insurance company would file a tax return as. And everybody knows what's going on in the IRS. Or no, they don't know what's going on, but they read the news every day. Tax rates may be going up, they may be going up, we don't know. But right now, there's acceptance of the type of programs that we have by the IRS. We're happy about that, and this is a knock on wood type of statement. We've heard nothing as far as anything that might be on the horizon as far as a change in the tax laws that we operate under. Now that's the insurance industry. I can't talk to you about the industry or the American economy as a whole because you don't know what tax rates are going to do. But as of right now, the tax environment is very positive as far as our type of programs. So we're very happy about that.
Jim, reinsurance sometimes can be confusing for people. Even people in our audience have questions about it. Tell us just very simply, what is reinsurance? What is the thought behind it? Why is it of value?
Yeah. Well, I talked about reinsurance at a policy level a little while ago, but basically what it is, it's a sophisticated profit-sharing program for a car dealer to get into. If a car dealer wanted to get into a less sophisticated program, they could just try to participate in the profits or lower their premiums as low as they could, which puts a lot of pressure on the insurance company. So there are a lot of people out there that will try to get the lowest premiums they can, which puts a lot of pressure on the insurance company. And it could end up hurting the car dealer. In our case, we don't have so much pressure lowering the premiums because the dealer or the agent or other type of producer is able to participate in the profits. So therefore, reinsurance in its basic form, the way we do it, is just a sophisticated profit-sharing program for the producer of insurance to participate in. And there's advantages to having an insurance company. It generates a lot of assets. You get to set up reserves. There's just a myriad of advantages to a reinsurance company that allows a dealer to maximize his profits in today's environment.
Jim, at Agent Entrepreneur, we have a lot of agents who would ask the question, how would I benefit from this program?
Well, I got an immediate answer and then a little less immediate answer. Number one, most dealers are presented with reinsurance out there. And if an agent doesn't have a reinsurance company in his portfolio, then he's not competitive with other agents out there in the marketplace. So number one, it just helps an agent get business from a dealer. If he doesn't have a reinsurance program, it's going to be very, very difficult for him to compete out there in the marketplace. So that's the most immediate answer I can give you. But the long-range answer I would give you is an agent, if he produces enough business, he has the ability to participate in the profits of the program. And we've developed programs that are specifically tailored for agents, where they can benefit the dealer in one aspect of it, but ancillary products that the dealer might not want to participate in or might not be participating in, the agent is able to participate in. So we've developed programs that are really focused on the agent and trying to help them make more money out there in the marketplace, because they've got pressure just like everybody else does on their commissions, the revenues they get, everything. And our programs allow them to be more competitive, just having a reinsurance program to go, or the ability to participate in the profits if they so choose.
Jim, for a dealership to implement a reinsurance program, what is the critical mass that dealership needs to have?
Well, it's gotten smaller than it used to be. The price of entry into this type of program, let's just use $5,000 as a cost to form an insurance company. But then, what do you need to do in order to produce business to make it an underwriting a feasible option, and also to make some profits? Let's take a dealer that sells 50 cars a month, and let's say he does a really good job of F&I penetration at 40% on the service contracts. So he's going to do 20 service contracts a month. That in and of itself might or might not be enough business or enough revenues to justify the formation of a reinsurance company. But in today's F&I department, you've got service contracts, you've got GAP, you've got tire and wheel, you've got aftermarket products. We have a lot of dealers that are doing limited warranties, that in order for them to bring customers in, so that they'll pay for themselves, not even charge the customer. It's a giveaway to the dealership. It's a giveaway to the customer, but it's a cost to the dealership, but it allows the dealership to have a value-added type of product to them. And when you add all those products together, you can justify the formation of a reinsurance company. So if you're giving away money in order to attract dealers, why not give it to yourself?
Sure.
And so that's what we've done. We've tried to develop products, a myriad of products, that when you take them all in total, make it justified to form your own reinsurance company.
Jim, with such a minimal investment up front to start a reinsurance company, how does it work as far as having enough reserves to cover claims?
Well, let me give you two answers. First, I said it was single premium business earlier. And when I say single premium, even though if a person buys a car and they have a loan, they'll pay for that loan over 5 years. The lender is financing that service contract, the other products, day one, so that the insurance company and the reinsurance company gets all their premiums up front. So if you're doing that 20 contracts a month that I mentioned earlier, times, let's say, $1,000 a contract, that's $20,000 of premium, that's $240,000 a year. And if you take the ancillary products, let's double that. So that's $480,000 a year of revenues that are coming in. And if you operate like a traditional casualty company did and had an 80% loss ratio, 80% of 500,000, you'd have 400,000 claims and 100,000 of profit. This business, hopefully, can be more profitable than that. So let's say they've got a 60% loss ratio. 60% of 500,000 is 300,000 of claims. That's what you're going to pay over the life of the policy, not year one. So you've got $500,000 in the bank, and you've got 5 years to pay that 300,000 of claims. So it's 60,000 a year. I think my math's right. And so basically, this type of insurance company or this type of insurance product generates enough revenues on the front end or assets on the front end to pay the claims over the life of the policy. That's what makes the whole thing work.
Jim, obviously this is Agent's Entrepreneur Magazine, so tell me, how does the agent participate in the profit sharing you've spoken about?
Yeah. Well, I mentioned earlier about a dealership that do 20 contracts a month, and you could get up to $500,000 of premium when you talk about the service contracts and the ancillary products. We've developed programs that allow agents to participate in those profits also. So at $40,000 a month of premium, that's $480,000 a year. Let's round that up to $500,000. If the loss ratio, and he had profitable business and he managed his business, had a 60% loss ratio, that's $300,000 of claims. That's an agent being able to make $200,000 on as few as 20 contracts a month. And it doesn't fit the model for a single agent, single dealer type of program, but we've developed a program that has multiple shares of stock, if you will, so an agent can buy a share of stock in a bigger company and participate in the profits. There is some risk sharing in there, but basically it's limited risk sharing. So the agent gets to participate in most of the profits that's generated. And it's a way for him to make more money. And we've got agents that think the world of their profit sharing program or their reinsurance position, and they're able to capitalize on that.
Jim, tell us, what are the building blocks of a reinsurance program?
Well, I guess there's three parts of it, and the first part is the insurance company. You need the insurance company or the direct writer, the fully capitalized, preferably A-rated company in the U.S. that issues the insurance policy. So that's number one. But that company has to be agreeable to reinsuring the business into your reinsurance company on the tail end. And I guess that's part number three as far as what I'm saying. But then you need part number two, which is basically the either the boring part or the necessities for having an insurance program, and that's the ability to administer, to design the policy, to issue the policy, to administer the policy, to pay the claims on the policy. You need all those building blocks. And if anybody knows me, they know that I'm a kind of a nerd, and I like technology. And we have spent a great amount of money developing the technology for the distribution of our product. So we've got the front end and the back end, but I'm as proud of the middle part as anything. And people have heard what we've coined the term of our software. About 5 years ago, we knew we needed a better way of inputting certificates when a dealer produced business. And we were having trouble with the DMS providers. Everybody is aware of what the DMS providers are. And we developed an online entry system 5 years ago. And where are we located? Our home office is in Albuquerque, New Mexico. We're looking for a good name for it. OLE, online entry. What the heck? Our system is called OLE. And now we have all the dealers that we do business with have the ability to input their policies through OLE directly into our system, so they have immediate real-time introduction of their policies. We also have DMS integration, and we're in the process of trying to make a arrangement with every DMS provider so that the dealers also have the option of DMS integration as well as OLE. We do a lot of used car business. And so the used car dealers we do, they don't have the sophisticated DMS systems like the new car dealers do. So OLE is a definite benefit to them. Sure. As far as putting their policies on the system. So we love technology, and we think we're good at it, and we've had fun doing it.
Jim, we've been talking about all the positives and the good things that are going on. That's not always the case, and there are bad things that happen. Can you elaborate on that?
Well, we've been fortunate with our reinsurance programs in that they've all broken even or made money. We've never had a reinsurance program in its entirety lose money, even though we have had positions lose money. So like nobody can say they've always been 100% profitable, and just like everybody else we're there. But we're still here today after 25 years. I'm happy to say that. What I can tell you is what reinsurance has been able to do to dealers to help them get into the hard times. There was an article in F&I magazine about 3 years ago, back when the economy was at its worst. And y'all interviewed a dealer, just happened to be one of our clients. And his statement was, if it weren't for the reinsurance company, he wouldn't be in business today. He was able to utilize the assets that had accumulated and earned in his reinsurance company to help pay the bills of his dealership. And I was proud of that as anything that we've ever done. So not only have we been able to make dealers money, we've been able to generate assets they're able to utilize to help them pay the bills, if you will. And hopefully there's money left over at the end of the day for them to have as a profit sharing program at the end of the day. And now we can expand that to the agents. We've been able to do that with the agents, and they've been able to utilize the assets in the insurance companies. So we're happy about that.
Jim, I do appreciate the time with you here, this beautiful island, and as looking forward for reinsurance and the profitability, the viability of it, what's your kind of outlook going forward?
Good question. First off, I don't see any significant regulatory changes. I think it's pretty mature business, and everybody knows how to do things the right way. So I feel good about that. As far as the economy, everybody's got problems right now. But basically, with the problems that you see in the economy, I think that's the best time going to think about ways to maximize the profits for everybody in the food chain, if you will. And basically, reinsurance is, I can't think of a better mechanism for a dealer to make more money, for an agent to make more money, either through having a reinsurance program so it's competitive, or participating in a reinsurance program. So I basically see this as a necessity to have in your portfolio if you're an agent, if you're doing business with the sophisticated or even the unsophisticated dealers out there today. And if tax rates change, I can't tell you what's going to happen, but basically this is a way to defer taxes into the future and be able to manage what your business is doing in the best way possible. So I see nothing but good things going on for reinsurance in the future.
Jim, thank you very much.
Thank you.